Okay, bookkeeping, what is it? It's accounting. It's recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are of financial character, and interpreting the result thereof. That's really about what we're talking about here. When we're looking, we talked about management accounting, we talked about financial accounting. This really talks about financial as a whole. What is it? Sorry, accounting as a whole. What is it? Well, it's about recording the information about transactions and events of a financial character. And why? What's it about? It's about interpreting the results from that. That's where we go into the leadership style in terms of, or leadership in terms of organizations. We looked at different accounting types: cost accounting, tax accounting, financial accounting, management accounting, various types of accounting. But you know what? They all come together as part of this definition. We looked at the balance sheet. We looked at the income statement and we looked at a statement of cash flows. Those are the financial statements. Those are the three key financial statements of any organization. Those are the three key financial statements that we are going to look at: the viability, the healthiness of an organization, but also those are the three that are required by law. More so the first two, I think: balance sheet and income statement. These are the fundamental dashboard, if you like, the fundamental control. Yang Chen, can you just Yang Chen, can you mind just mute? Okay, so sorry about that. There's a little background noise there. We also talked about the managers of. Excuse me, let me just see if I can. Yang Chen, can you just mute your speaker? Sorry guys, I'm just trying to. May, can you mute everybody? Okay, we got a bit.
Yeah, Dante, you didn't go.
Okay, let's carry on. And sorry about the background noise. I think it's stopping now. Okay, so we talked about who are the users of financial statements, and we talked about. Sorry, what's that? What happened there? Who are the users of financial statements? Managers of the business, shareholders, trade contacts, the bank, tax, employees of the company, financial analysts and advisors, government agencies, general project. So we talked about all of the stakeholders of the organization in that regard, and who needs to see it. We then said, okay, what's the balance sheet going to tell us? How are we going to start to read it? How are we going to start to understand it? We looked at the balance sheet in a little bit more detail. And remember, some of the things we've talked about, however large the organization, however complex the organization, everything is going to come into one balance sheet. Everything is going to come into one balance sheet. If you look at the financial report of an organization, usually available publicly, this will all come into it. And you'll be able to read it. And you'll be able to carry out your ratio on total assets versus total liabilities, or current assets versus current liabilities, quick ratio. 2 to 1 in this case, almost. And that's going to really give you a great understanding of the organization. Similarly, if you look at the profit and loss statement, we're going to look at how that builds again, but profit and loss, essentially revenue minus expenses, gives us our net income. I really like this graph. This graph, bar chart, sorry, really describes nicely, I think, what we're here to do. Well, we're here to make a profit, but what's that profit going to consist of? Well, it's going to consist of revenue. to get to our retained profit, to get to our bottom line. And the bottom line, actually, a lot of people refer to as the operating profit because the tax and interest and all that sort of stuff are after that. But when we look at our retained profit, profit that's not touched, if you like, from the sales and the revenue, we take off the cost of sales. That gives us the gross profit. We then take off expenses, our operating expenses. That gives us our operating profit. Then we take interest and tax off. That gives us our net profit after tax. Then we take off any dividends. So what do we pay then to our shareholders? There is our retained profit. And there is the money that can go into the investment for our business for next year, as an example. Really easy concept. Role of accounting standard is really to make sure that the right information that is needed by the relevant legal stakeholders is included, is submitted by an organization. And that's what we talk about when we talk about accounting standards. That's what we're referring to. You know, government sets standards, government sets criteria, usually through a national accounting body, and it may include legislation, government regulations, accounting policies, and all that type of thing. But basically, every organization will get guidance from a public sector body in what needs to record it and how it needs to do it. I have a very, very small business. I still have to every year submit a profit and loss to the government of Australia. I have to submit my profit and loss statement and make my balance sheet available to the government of Australia. My business is actually a very small business